Hey guys, James White here at Bull Market Stock Trades, and I'm going to show you a video today of the most popular and simple method of day trading. There are many methods to day trading, just like there are many methods to swing trading, position trading, trading the dollar, trading currency, trading precious metals, mutual funds, index funds, real estate, you name it, there's unlimited ways. I'm going to show you usually the first and most basic trading technique that day traders learn. Now the thing about day trading is that you need to have $25,000 in your account. There's a law called the pattern day trading rule that pretty much states if you enter and exit inside the same stock within one day and you do that 4 times within a 1-week period, you pretty much break the pattern day trading rule and your account gets frozen for I think it's 60 days, maybe 90 days, until you put $25,000 into it to unlock it. Once you have $25,000 in your account, you can trade all day, every day, as much as you want, and you're in the clear. Now, if you have $25,000 in the account, chances are by now you've also applied for a margin account, meaning that however much money you have in your account, your broker will pretty much double it. So you've got $25,000. Now you've got $50,000 to play with. You only need $2,500 to apply for a margin account. But at that point, your broker does double your money. Basically, the way that works is, let's say you use $10,000 of your broker's money on a trade, and you exit the trade with a $200 gain. They just take that $200 off the top and add it to your cash account. But if you exit that trade with a $200 loss, then they take that $200 and they subtract it from your actual cash account. But basically, you're using the margin account and your broker's money to maximize your leverage and make larger trades. All right, so getting into this technique, it starts out with waiting for the morning spike or panic to end, which is usually the first 1 to 2 hours of the day. Right when the day opens, everybody's excited. Everybody wants to get in there and make some money. Lots of purchases going on. You got lots of stocks spiking. At the same time, you also have people panicking. You have lots of selling going on, so you have spikes that are plummeting. The first 2 hours of the day, there's a lot of volume. There's a lot of action going on. It's a risky time to trade. But it can be profitable if you know how to do it. The second thing is to screen for the market movers and highest gainers. Most brokers have screeners that you can use for this. I like to use FinViz, and we'll show that to you. You're going to watch for pullbacks off of the spikes and trade on consolidations, and I will show you how that works. So this is a screenshot of FinViz. FinViz is a free screener, FINVIZ.com. I like to just set the price to under $10 and the current volume to over 400 on their parameters. You just click on their screener, click on price, under $10, current volume over 400. You can play with that. You don't have to do under $10. You can do under $3 or over $5, under $100, whatever you want. I found 400K is the minimum volume you want to choose. With 400K, you have a stock that is moving. If you get under 400K, you get slow moving stocks. The more volume you have, the faster stock can run up. You can make money quicker and easier, but at the same time, the more volume you have, the more selling that can go on, and the stock can move against you fast as well, and you can lose money. I like to click on this change tab. It'll put the stocks in order from the highest percentage gainers down to the lowest. So this way I can see which stocks under $10 in the market are running up the highest for that day. The thing about being a day trader is people always say, oh, what's a good stock I can buy? What should I invest in? I don't know, because yesterday there was 3 or 4 stocks that ran up that I traded, and tonight there's going to be 3 or 4 different stocks that ran up that I traded, and I did it so fast, I don't remember what they are. I don't even know who they were. I couldn't tell you anything about the company. All I know is they're going up that day, and I was trying to get in and capitalize. What went up yesterday could plummet tomorrow, so I don't like to tell people what stocks I traded, but this is where I get them from. So basically what we're looking for is our morning spike. See, the first hour of the day, PPCH spiked way up here. And what I'm looking for is the pullbacks. I'm watching the stocks that spiked, and I'm looking for the pullbacks. I had 20 stocks in that list, and I'm just scanning through the 20 stocks, in that second hour of the day. I'm looking for which ones pull back, and the key is they need to pull back and then start making higher lows. So we found a bottom here, and started making higher lows, and this thing started gearing up or perking up or forming an ascending triangle or the ABCD pattern, or I like to call it a consolidation. We started rising up here, meeting the same level of resistance, but yet making higher lows. Once we reach in this point, this is your entry point. This is where you want to go in. On PPCH, I bought 30,000 shares at 0.0815. Yeah, 0.0815, a fraction of 8 cents. I bought at 0.0815 and I sold at 0.0845. Each one of these ticks represents 1 minute. So you can see about 10 of these ticks later is where I sold. 0.0815 and sold at 0.0845 for a $90 profit in 10 minutes. FXCM, I played this twice actually inside of one day. You can see about an hour and a half, hour and 15 minutes in the day, this thing spiked up. We ran out of buyers. The buyers started selling off and taking their profits. We found a bottom and started making higher lows. This thing started consolidating and forming up into this point. Once we reached this point, I bought 3,000 shares at $1.50 at $1.59. Actually, this thing started running up. This thing started running up, and I bought 3,000 shares at $1.59 right here, and I sold at $1.63 about 5 minutes later. Again, 3,000 shares at $1.59. 5 minutes later, I sold at $1.63 for a $105 gain. Later in the day, FXCM started consolidating again. So the first run up I had was over here. And you can see I sold way too early because this thing ended up going really high. But I sold and I was safe and took my profits. It came down, bounced around a little bit, and it wasn't until here that it started making higher lows. So once the thing started making higher lows, I put my eyes back on it and started watching it again. And I bought in at this point, once again, I bought 1,500 shares at $1.63, and I sold at $1.68. This was 3 minutes. 3 minutes later, I sold at $1.68 for a $70 gain. UEC, I did not get in on this trade, but I wanted to show you this chart because it is a perfect textbook play here. They don't always work out this well, but 75% of the chance when they start making these higher lows and reach this point, they do spike up. Whether it's a little bit or a lot, you never can tell, but they usually do spike 75% of the time. So, first half hour of the day, UEC spiked up, came down and started making higher lows. Now this was not my low because it came up and made an even lower low, so I'm not watching it at this point. It wasn't until up here it started making higher lows that I start watching this thing and I keep it on my radar. You can see once it closes in reaching this point about $1.88 and a half, or $2.88, $2.89. It was right in this area that it did spike. It spiked 4 cents, which doesn't sound like a lot for a penny stock. That's a huge move. That's 2 or 3% you would have made in just a few minutes. Once you got into this area and the stock started spiking and started, going up and down right here and turning sketchy, this is when you would have exited and taken your profits. You could have watched it the rest of the day to see if it ran again. It had another run up here. You can see it came back down, very quickly. And started making higher lows right away, and there was another consolidation and a run right here. This is the simplest method to day trading. You can do this all day, every day. Every day you have different market movers and different gainers, and every day you can watch these stocks and make these trades over and over again. The great thing about day trading is you're not holding any stocks overnight. So when that day is over, you are free of all trades. You don't have any losers, you don't have any winners, your cash is safe. You don't have to worry if the next morning when the stock market opens if your cash is going to just plummet and the stock's going to sell off. You also might miss a spike, but at least your cash is safe and you're in complete control of it. And a stock like this, when it came up, this last low that it made would have been your exit point. So if this thing would have failed, this low point is where you would have exited. But as long as you would have gone up, you would have let it run as long as possible. So you're risking losing a little bit. for a possible huge run up. You know, the reward outweighs the risk on this stock play every time. That's it for this video. That is the simple method to day trading. There are many other ones, but this is the easiest one to do. Thank you and have a great day.